Be Wealthy and Smart, episode 1016.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the Tesla stock split and dividend announcement. Because yes, for the second time in under 2 years, Tesla has announced it will be splitting its stock. So I want to give you all the details on that, and I'm going to share with you a special article from CNBC. But also, I'm going to give you my chart analysis of what it looks like is going on with the stock's price. This article comes to us from CNBC, and it was written by Fred Imbert. And it says that Tesla wants to split its stock so it can pay a stock dividend to shareholders, according to a filing on Monday. The SEC filing said it will ask at its annual shareholder meeting for an increase in the number of authorized shares of common stock in order to enable a stock split of the company's common stock in the form of a stock dividend. Of course, a stock dividend is extra shares paid to shareholders instead of cash. And the dividends don't affect the value of the company, but they do dilute its share price because there's more shares, so it makes each share a little less valuable. And the article says if there's a 6-for-1 split, investors will get a stock dividend of 5 shares for every 1 share of Tesla they own. That would be a one-time event. And the last time it split its shares was August of 2020 when it did a 5-for-1 split, which took effect in August of 2020. Year-to-date, Tesla is down 4.4% after being up 49.8% in 2021 and 743% in 2020. The article also noted that there was a Bloomberg News report that said Tesla will halt production of its Shanghai factory due to a COVID-19 lockdown in the city. End of article. All right, so we have some bad news on the table about Shanghai and a factory closing, and that may impact the price in the future, as well as the dilution of the shares. But what I see when I look at the stock chart is a bit of bearishness. That means it doesn't look like the stock wants to run up from here. It looks like I could name multiple reasons why the stock looks like it wants to go down. First of all, it's overbought. So it's really looking very toppy here, like its valuation is stretched and its relative strength index, it looks like it's starting to get overbought. Number 2, we're close to a death cross, which is when the 200-day moving average moves above the 50-day moving average. That's usually a bearish sign or a sign that we could have a prolonged downtrend. It doesn't have to be for very long, but it just usually is an indication that the stock does want to cool off and pull back. The third thing that I see is that there is a gap below the current price. And so to me, the next move for the stock would at some point soon be to head lower and fill that gap. But I think since we have a death cross, it could just continue to go lower and go below $1,000 a share. So if I were looking at buying Tesla, I would wait and see if the stock does pull back. It's gone up for 10 out of the last 11 sessions. So it really hasn't had a pullback, only one slight pullback in 11 sessions. So I would just let the stock sell off a bit. I would let it close the gap. I would let the death cross happen. I would let the weakness go on and see where you could probably buy it. I think you might even be able to get it under $800. I think there's a chance you could see that. And today it's at $1,099. So that's quite a large percentage move if you could buy it cheaper. Now the article didn't give us a date for when the annual shareholder meeting is or the date that they're looking to split the stock. And quickly looking at the Form 8K that it filed with the SEC, I don't see it on this form here. So I would just say it looks overbought. I wouldn't be in any rush to go out and purchase this. I think if you are, you're looking at probably a 20 to 30% potential decline. So I would just wait and look at buying the dip. Of course, there's no guarantee that will happen, but it just, by looking at the chart, it definitely does not look like it wants to run and take off like it did last time they announced the split. Okay, and again, just looking at a couple articles trying to find out when the shareholder meeting is, it's not saying in these articles that I've looked at. So I don't exactly know when the vote's going to happen or when the date of the split will happen, but I think you have time. So again, I would just be cautious. And if this is something you want to do, take your time, buy the dips. I do think you're going to have a really good opportunity to possibly pick this up a lot lower if that's what you want to do. Do your research, not giving financial advice, just letting you know what's going on. And another thing that's happening is Link2 has Ripple stock back for sale for accredited investors. If you qualify as an accredited investor, that means you have $1 million of assets outside of your home, or you make a $200,000 income or $300,000 joint income, or your accountant vouches for you being an accredited investor, or you hold a Series 7 license or equivalent. Any of those things will allow you to buy Ripple stock. Minimum investment is $10,000. And as a bonus right now, they're giving back $1,000 in XRP. Plus, you're getting a bonus of 500 Link2 bucks that can be credited toward your next purchase from Link2. And I'll give you $250 of Link2 credits if you use my link that's in the show notes. So all in all, it's a great time to buy Ripple stock if that's something you've been wanting to buy. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.